What's going on, everybody? Welcome back to the channel, and in today's video we're gonna be going over a trading strategy using the MACD that you can use to get into really profitable trades. Now, I think this is one of the most simple trading strategies that I've covered on this channel, and I think you guys are really gonna like it. But before we get into it, make sure you hit that subscribe button, smash the like, and click that notification bell so you don't miss any of these great tutorial videos or urgent market updates that we will be uploading to the channel. Now, for this strategy, we're gonna be using two things. It's gonna be the MACD, or the moving average convergence divergence indicator, as well as an EMA, right? If you guys remember to my moving average video, we went over EMAs. All an exponential moving average is a moving average that puts weight on the most recent price action, so it does tend to react a little faster to price action, so it works a little better to use an EMA when you're trading rather than a simple moving average. So without further ado, let's jump into the charts. I'm gonna show you how to add both indicators, what settings to use, and then we're gonna go ahead and back test the strategy, and I'm gonna show you what you need to see in order to enter a long or short position, where to set your stop loss, and where to set your take profits. Let's get into it. So as you can see here, we are on our Bitcoin 1 hour chart. We're gonna be using the 1 hour time frame for this example. Now, first, what you're gonna wanna do is you're gonna wanna come up to your indicators button. You're gonna go ahead and click it, and then you're gonna type in MACD, and you see moving average convergence divergence. You're gonna wanna click that, and then you should see it pop up on your chart like this. So next, we're gonna add an exponential moving average, or an EMA. So you're gonna go back to your indicators button right here, go ahead and click and type EMA, and you will see right here, moving average exponential. Go ahead and click that, and you will see it pop up right here on your chart. Go ahead and click this settings wheel, or just double click on this little box. So for this example, we're gonna use a 100 EMA, right? So it's gonna be somewhat medium term trades, and we're gonna use the 100 EMA for this, right? And then we're just gonna come to style, we're gonna click this, and I'm gonna make it a little thicker so it's easier to see, and then you can go ahead and hit OK. So like I said, this is one of the most simple trading strategies that I think I've ever covered on the channel. So basically with this strategy, what you're gonna be looking for is, number one, the most important thing, as always, you wanna remember the trend is your friend, right? You're not gonna wanna be looking for shorts if you're in a big uptrend, and you're not gonna be wanting to look for longs if you're in a big downtrend, right? So that's where the EMA can come in to help. So with the EMAs, if you guys have not watched our moving average video, I will link it up here in the top of the video. Definitely go check it out. We go into how moving averages are calculated, how you can use them, and then we also have a moving average trading strategy, right? So definitely check that video out if you have not already. But if you have, you know that when you're above the moving average, right, typically this is when you're looking for longs, and then when you're below the moving average, this is when you would be looking for shorts. So same rules apply for this strategy. So you only want to be looking for longs if you are above the moving average like we are right now. And then if we are below, that's when you're looking for shorts. So the trend is your friend. Always remember that. It's applicable to basically any trading strategy that you're using. You just never want to go against the tides, right? You're just decreasing your probability of winning if you're trading against the trend. So first, I'm going to be showing you some long examples. So you can see we've been respecting this EMA right here. We stuck it a couple times down here. We stuck it again here. Big panic wick down below here, but we did come back up and hold it as support right here. And then you could see again right here, we broke below and then came right back above. And so you want to see that you've been sticking above the moving average at least a couple of times, right? And so let's say you are seeing price come back down and approaching the moving average once again. Now, what you're gonna be looking for here is for price to be coming down and touching the moving average, or at least getting somewhat close, right? So obviously we didn't exactly touch right here, but we got pretty dang close. And what you're gonna be looking for here is, as soon as the price is getting down to the moving average like this, you're gonna be looking for a bullish crossover on the MACD. If you guys remember back to our last MACD video that we just released, you will know that with the MACD, you're looking for the blue MACD line to be crossing over the orange signal line to indicate bullish momentum. So as we came down right here, we got pretty dang close to this moving average. You come down here and you see we are getting the blue MACD line crossing above the signal line, right? So this would indicate that you're about to have some bullish momentum, and this is where you would enter the trade, right? So if you did get in here, we'll be a little conservative and say that you entered right about here, right? And you could have wrote it up for 4.2% profit to this level. That's 42% profit. Slap some 10x leverage on it, right? And then you could also come up for some extra gains here. If you did hold, I would suggest maybe taking out part of your position here and then letting the rest ride. You could have wrote it all the way up for 9.4% profit or 94% profit with 10x leverage. That's almost 100% on your money. So this is a very, very profitable strategy, right? It's also one of the most simple strategies out there. So you see this one would have played out very well. Now we're gonna be talking about your stop losses and your take profits in just a second, but let's go ahead and see if we can find another example. So you can see right here, we were below the moving average just a little bit, right? And then we came up. We did not come back down and exactly touch the moving average, but we did come back up, and then you stuck it again here, you stuck it again here, and then you're coming down again right here. So when you come down for this touch, you know, granted, if you got in here, you might have taken a little bit of a ride, but as long as you're setting your stop losses in the right place, you would not have gotten stopped out, right? I typically suggest setting your stop losses below the previous swing low, or if you're using moving averages, as long as you're keeping it below the moving average, you should be in pretty good shape. So let's say you see it coming down right here, and you come down to your MACD, right? And you do have a bullish crossover on the MACD, right? So let's grab our vertical line and let's go ahead and just mark this crossover. I guess we'll mark it right about here, right? So let's say, you wanted to enter right here. This would have played out pretty well. Let's say you got in right here and you could have wrote it up to here for about 3.8% profit, right? And then, you could exit part of your position here and then let the rest ride. You could have gotten about 6% profit at this point right here, or obviously 60% profit with 10x leverage. Very, very profitable strategy, right? So now let's go ahead and take a look at some short examples. So as you can see here, we have been riding below the moving average for quite some time here. We were not coming up to test the EMA, right? We were just getting pushed down and pushed down and pushed down, right? And then you come up here and you test the moving average right here. So you can come down and look for that bearish crossover. You have the blue line crossing below the signal line, right? That orange signal line. This is a bearish crossover. Let's go ahead and mark it with our vertical line, right? And let's go ahead and assume that you entered in right here. And let's go ahead and use our short position tool, right? So let's just say you entered right here on the candle, right? And you want to set I would set my stop loss, right above this previous swing high, right? So you're above the moving average. So if price does come back up, you won't get stopped out right away. Chances are you will get some resistance off of the moving average, right? And then if you do peek through or just wick up, you are above that last swing high. So hopefully you don't get stopped out. But then you're going to want to grab your take profit, right? And you're going to want to drag it down. I would say about 1.5 risk to reward ratio is pretty good for this strategy. And you will see if you look here with a 1.5 risk to reward ratio, you would be taking either your whole position out here or part of your position. And if you draw a horizontal line, you will notice that you're taking your profit right before this swing low right here, right? So I do suggest when you're taking profit to maybe take it a little bit before the previous swing low, right? Because chances are, if you bounced there is a chance that you could bounce there again. So I do recommend taking it a little bit before, but a 1.5 risk to reward ratio is pretty good for this strategy, right? So you would have gotten about 3.9% if you wrote it down to here. You could take about 50% out of your position and then let the rest ride. If you did let the rest ride, you could have wrote it all the way down to here for about 10% profit or 100% profit with 10x leverage. So very, very powerful. Now let's see if we could find another example of a short position. So you can see right here, we got rejected here once, we're below it, but we kind of got rejected here again, right? So now you're waiting for the price to come up and touch the moving average. We had it right here. So for our next example, we're going to go ahead and switch to regular candles and use our replay tool, right? So you can see here that, you know, we are below the moving average. We got rejected once, we got rejected again. And okay, so here we have hit the moving average again. So let's go ahead and put in a short position. Click here, and let's say we got in on this current price right here. Let's move our stop loss right above this swing high, above the moving average, right? Because we want the moving average to protect us from getting stopped out, right? You know, chances of the price coming back up and testing the moving average may be likely, but you know, if it comes up and breaks again, you might want to get out of the trade because the trend might be reversing. So we're going to go ahead and change our risk to reward ratio to about 1.5, close enough, 1.51. You could see that right here. And then your stop loss, you want to put right above the moving average, above this last swing high. And let's go ahead and move forward in time and see if this one would have worked out. And boom, look at that. We did come below our take profit right here. So we hit our take profit, and that one would have been a winner. You would have pulled about 3.8% profit on that one, right? Now, again, you can take half of your position out and try to ride it down further, or you can exit 100% of your position. So 3.8% profit or 38% profit with 10x leverage. Very, very nice. So you can see, you know, not too far away from our last position, we came back above the moving average, stuck it as support, came up, came back down, sticking it again as support right here. So let's go ahead and see if we get a full bounce, and boom. So now we're looking for the price to come back down and test the moving average, and let's see if we get it. Boom. Okay, so we're touching the moving average right here. So let's go ahead and grab our long position tool, and let's go ahead and enter our position right there. Our stop loss is right below this last swing low and below the moving average. And let's change our risk to reward ratio to 1.5, right? 1.51, can't quite get it on that perfect 1.5. And let's see if this one plays out. So we hit our take profit right here. So this one would have been a winner, and you would have gotten about 4.3% profit or 43% profit with 10x leverage. So you can see how profitable this strategy is. It has a pretty high win rate, and it's very, very simple. All you need to do is identify whether you're above the moving average. Are you trending above the moving average? That's when you're looking for longs. Are you trending below the moving average? That's when you're looking for shorts. And then you just wait for price to come up and hit that moving average, and that's where you're going to enter the trade. And then your stop loss, you want to put below the moving average, below the last swing low. That's kind of how I do it. And as far as take profits, I find that a 1.5 risk to reward ratio happens to play out pretty well with this strategy. So before we wrap up this video, let's go ahead and see if we can find another short example. So as you can see here, we've fallen below the moving average. We came down, we got rejected, we came back down. Let's see how this is playing out. Right, let's play it. We're below it, not quite getting, you know, right to that moving average, but we are getting rejected from this area. And you know, now we're looking to come up and actually touch the moving average, and let's see if we can get it. We got rejected again right here, and you know, boom. Okay, so now we are piercing through the moving average. Now we're going to want to come down and keep an eye on this MACD and wait for a bearish crossover, right? So theoretically, if we do find support on this moving average and start moving up, you may not get that bearish crossover, so that could kind of save you from getting into bad trades. And let's see, they're starting to converge. They're getting closer, and boom, you get the crossover right here. So let's grab our short position tool, right? And then you want to go ahead, let's say we get in at this exact price. You're going to want to move your stop loss above the previous swing high. You are above that moving average, right? So it's a little extra safety. And then you're going to want to bring your risk to reward ratio down to about 1.5. There you go. And let's go ahead and see if this one plays out. boom. There you go, your take profit gets hit. And you know, like I said, if you wanna be a little more conservative, you can take your profits a little before this swing low right here. But we did hit our take profit for about 8.4% profit, or 84% profit with 10x leverage. So guys, this strategy is very, very, very powerful, and it's very simple, right? You're just waiting to come up and test the moving average, and then you're looking for the bearish crossover as a confirmation, right? And you can use other things like levels of resistance, right? If you just want to start drawing some horizontal levels of resistance, you can see here we stuck this, we stuck this, we stuck this, we got rejected, 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 right? And then you come up, you can expect to get rejected again. And you know, we did pierce through this. We did pierce through this resistance a little bit, making you think maybe, I don't know, maybe the trend's gonna reverse. We're gonna hop on top of this moving average and use it as support to go higher. But because you're looking for these crossovers on the MACD, you can notice that when you're piercing through the top of this, you don't have that bearish crossover yet, so you wouldn't be entering the trade anyway. So you don't enter the trade until you're back below the moving average. So this is super, super powerful, super, super easy, guys. This is one of the most simple trading strategies you can use. So guys, I think that's all I got for this strategy video. I just wanted to bring this to your attention. I know we have a lot of beginners on our channel, and you know, I know we do a lot of market cipher on my channel, but I do like to bring up, you know, strategies and tools that are not paid, right? Everything I'm using right now is free. The MACD is free on TradingView. The moving averages are free on TradingView. TradingView is free, so zero barrier to entry. Anybody can get in and start trying this, right? If you wanted to trade, that's the only money you would need, right? Just your capital to start trading with, but everything else is free, so zero barrier to entry. So just to do a little recap, right? You're gonna be using the MACD, and we're using a 100 EMA. You're using an EMA, right? Instead of a simple moving average, because EMAs put emphasis on the most recent price action, giving you a clearer view of what traders are doing, right? And the actual line is more reactive to the price action, right? So when you're trading, using EMAs is typically better than simple moving averages. And then you're just waiting to identify if you're above the moving average. Are you trending above the moving average, or are you trending below the moving average? Obviously, when you're above, you're looking for longs, and when you're below, you're looking for shorts, right? Not gonna be the best strategy if you're just in a ranging market, right? You're gonna wanna make sure that you are trending below these moving averages, right? So then you just wanna go down to your MACD, and you wanna wait for that bearish crossover or wait for that bullish crossover, and then enter your trade, and then set your risk to reward ratio to 1.5. And as you can see, it has a pretty high win rate. So go hit the charts, add the MACD, add the 100 EMA, hop on that 1 hour time frame, use your long and your short position tool on TradingView like we did today, and back test it, right? See how price action works, see where you might have gotten faked out, right? Get a feel for it, and then get onto Femex, wait for that price to hit the moving average, wait for that MACD crossover, get into some trades, and make some of that money. With that being said, guys, that's all I got for this video. I'll see you in the next one. Frankie Candles out.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor, ayy, on a roll, here we go, yeah, we winning by a landslide.